Well, we're about 2 minutes from the open. I would say the Globex session has a neutral bias. We're within the just a couple ticks of the high and the low of yesterday's closing range in the A period. Um, Globex low is 86 and the Globex high is 99. So those are two reference points that we'll be looking at here on the open. See where the New York Stock Tick chart opens up. And we have a positive open on the New York Stock Tick chart. We're right at the mean, right a little bit above the mean, and we're right by the zero line. So we'll see if we can get any buying activity at the open here. We have almost no volume here. I mean, look at the volume at the open here: 0, 58, 109, 128. This is very light opening volume. Lost my cursor here. This is very light opening volume. So we're just going to stand by here and maybe we have a consolidation day within yesterday's range occurring. The value area low is 92. The value area high is 07. So that's an area that we'll be potentially consolidating. And if we don't have volume coming in, then we're not going to have volatility and range expansion. So that's something we'll keep our eyes on, and we'll let the A period do its thing. Well, the New York Tick chart is building negative bias under the regression. We missed the opportunity with the low volume open to get aboard, so we're not going to chase the market down here 5 points. Just going to stand by and wait for the A period to do its thing for the first few minutes. We're only 5 minutes into the market. Sometimes the opening seems like an eternity. 5 minutes is such a short time. In the markets, it's such a long time. But anyway, if we get a retracement on the tick chart back up to the second standard deviation, we'll take a look and see how much room we have to get down to either the low of the Globex or the low of Friday's session, which is 82. So this is sort of nowhere's land right here at the open. We just didn't get much of a retracement. You can see at the 935 bar, about a point off the low. Well, we just haven't had an opportunity on a retracement to get back in here short at all. So we're just going to stand by here after the first 15-minute opening. Had a 5-point range from the open, just opened real lethargic and just sort of meandering here. I thought we were going to get a retracement back toward the 92s. We might have got short at the 92.75 area, but we just sort of went up 3/4 of a point. So the next main reference point is yesterday's low at 82, and 70 has some interesting aspects, and also 62. We have a real good probability that we're going to test under those lows before any potential rally occurs in the market. So we're just going to stand by here, and we have a negative tick building. The ETFs are all negative, and we need a bounce to the at least above the zero line, if not to the second standard deviation, before we're going to consider chasing this market down. You can see we're running a negative bias. We have negative deltas all across the board. So on any retracement here, we're in the 91. It would be real attractive to get short this open and see if we can't test the 82s at the low. So that's what we're looking for now, is an entry to the short side on this little uptick. You can see them hitting the offer, hitting the ask, initiating activity. Lost my cursor here. There it is. You can see him initiating activity. The 92.75 was my original target for a short. So let's see if we can get the 92.75s before some cross trade comes in, and might be positioned for a nice 10-point move to test the lows. If we can get some cross trade here and get an entry. We see him see the pullback column now negative. We're going to take the 92 short 292 and short 292, and we'll risk the Globex high is all the way up at 12.99. We'll risk up to the opening range high here at the 95.75, 96. Risk up to 96. We will risk 4 points on the trade. Our target is down at the Globex low. Initially, the range from 86.50 to 82. That's the area we'll look for a target. We'll put a buy to offset at 86 to 92. No, that's not right. 82 to 86. see if we can't get a nice morning trade here. It was a nice divergence on Friday in the ETFs and the S&P. We'd like to do an article on, might post that under the interesting points of interest on the website this week. But you can see that the E-mini S&P on Friday's session was making new lows, but the ETF XLF was not, and that created about a 15-point rally from the 82 lows up and closed off a few points from the M period high. But we're going to watch that divergence also today. The New York tick chart was also oscillating around the mean most of the day, and you could see a second standard deviation. Sells throughout the day worked well, and toward the close you could see the higher lows and the accumulation back toward the regression worked as well. So we're going to look for that pattern today. I wouldn't be surprised though we test Friday's low at 82. If we can hold on before we hit our stop, then we could have a nice 20-point trade and take a break, maybe take the afternoon session off and look for a reversal trade in the afternoon toward the close. Right now we're vacillating here with a little bit higher volume than we had in the opening 15 minutes. So we're just going to stand by here and see if we can't hit our target. Our stop is 94, a few points above, or 96, a few points above us. So we feel comfortable with that, and we'll see if we can retest the low. You can see him hit the bid now. You can see the deltas are building. You can see him hit the bid, the red. You can see the deltas now negative 11,000 cumulative for the day, 75,000, 7,500 delta negative on this column. So the tick chart's building negative. The energy ETF and the materials ETFs are quite negative. The financials are almost neutral, and the consumer staples are slightly positive. But the across the board, I think we have a negative bias, at least to the Globex low, at least I think to the 86 area, possibly to Friday's low at 82. So we'll stand by. Look at that, we got stopped out on that trade. Amazing, actually. We were at the 87 area, and we got up for just a minute. 87.50 got up for a minute, and boom, after all of this selling, obviously this well, it's off the screen now, but that area earlier, see if it's here, this area obviously was passive buying and not initiative selling. So they ticked 96, look at that, and the XLF sector rallied more than the E-mini S&P and more than the XLB or XLE, so that was a forewarning. We might have been able to get out of the trade at the 93s or 92s. Probably not the 92s. We might have been able to get out of the trade at the 94s and save ourselves some points. We lost 8 points on that trade. That's no fun. Now we're just going to sort of stand by here and see what the reaction was once we ticked over the 8-period high. That stop might have been just a little bit close. We have a neutral bias on the day now, though, so we're going to stand by here and see. Look at this, will you? They took it right up to the 96 even. Jeez, 142 contracts traded, including mine, and now we're back down to the 91s. Amazing. We're not going to change our stance. The market looks like it's just oscillating above and below. We're just going to stand aside here. When you look at that, we're breaking down below the lows where we had our original short position. I can't believe that they hit me at 96, right? Even at 96. Ah, that's a killer. Man, oh man, oh man. 96. With the high being 95.50, 96 was just too close. A half a point was too close. Should have been a point or more above the opening range high. That was the mistake that I made on that trade. It cost me significantly because the B period might actually test the Friday's low. We're going to take the 89.75s, 90 short, 2 short, 90, 87, yeah, 89.75. Let's see if we can get back aboard this little run this morning. 92 is our first entry, so this is not as good a trade location, but we're building a negative tick in the New York stock tick chart. So let's see if we can break below the Globex low and test Friday's low at 86 to 82 range. It'll give us at least, you know, our loss back from this morning. Our stop is above the market at 96 and change, but the mistake we made on this entry is we didn't wait for the close on the second standard deviation above the mean to get short. Um, you know, we could have probably waited for that to happen. So far, we had most of the closes are under the mean, so we'll see how this trade works out. We're going to attempt a better position to take the 93s. We'll give back the 89.75 to break even. Alright, we bought the other two back at 89.75. Break even, we're holding the 93s. Our stop is 94.75. We're out at the 85.75. It's still